Today I wanted to discuss the topic of value average investing, and I wanted to go over how you go through the process of doing that on a monthly basis. Um, in value average investing, it's the practice of investing a set value each month over a period of time uh, with a particular investment such as a stock. And let's use the example of Microsoft stock. So, in the if you've got let's say $5,000 to invest, and you want to look to try to make this investment over a course of a 12-month period of time, we'll use $4,800 for easy math. So you divide this by 12 over to use the investment over a year's period of time, and you come up with a monthly amount of about $400. So over a year's period, the investment that would then be about $400 monthly. And so now we use the example of Microsoft stock, and we decide that we're going to begin in month one, where we invest about $400, and we look to see where the stock is trading, and we see that Microsoft is trading at $27. So we would take $400 and divide it by 27 and come up with about 15 shares, which would be an initial monthly investment of about $405. So now we move on to month two. And in month two, we see that Microsoft is trading at about $28.50. And so we would then see that our initial investment, which was about 15 shares, is trading now at about $427.50. We then decide that we're going to look to try to make our total investment of $800, whereby we would have had the initial $400 that we invested, which is now worth $427.50, and look to try to increase that to a total investment of $800. So to make that total investment of $800, we got to take 800 minus 427.50 and realize that all you need to then buy is $372.50 worth of stock. So you take that $372.50, divide by the 28.50, and you come up with 13 shares. So you'd buy 13 shares of Microsoft at this point in time, and you'd come up with a total investment of $798. You add the 13 shares plus 15 shares, and you come up with 28 shares. You multiply that by the current price, which is $28.50, and come up with $798. So now we move on to month three. And in month three, Microsoft is trading at $26. So now our total investment of 28 shares is trading at a total, it's at a total value of $728. And so now we want to increase our total investment to be $1,200. If we're doing it at $400 a month, and we've done it now for 3 months, then we would look to be at a total value of $1,200. So now we take that $1,200 and we subtract the value that we currently have, which is $728, and we need to then buy $472 worth of stock. You divide it by the share price of Microsoft at $26, so $472 divided by $26, and we come up with 18 shares. And so we need to buy 18 shares of Microsoft trading at $26, and we would end up buying that amount, which would then after adding the total number of shares that we already had, which would be 15 shares plus the 13 shares and now the 18 shares, total value or total number of shares of 46. Multiply that by the current share price, and now our total value is $1,196. So We look to try to do that on a monthly basis over the course of a 12-month period of time, and investing over that time period the $5,000. Each month when you do this, you will lower your cost basis, and as a result have the best possible chance for the best rate of return. So it takes a little bit more work than just straight dollar cost averaging, but your return over time will end up being better because you will have lowered your cost basis. So thanks for watching this video, and if you want to have more information, visit my website at www.physiciansinfinance.com. Thanks a lot.